Welcome to Wealth Well Done. Together, we'll cover a wide range of important topics surrounding money and the impact it has on our lives. From the sophisticated and highly valuable planning techniques of the ultra-wealthy to the commonly underutilized biblical teachings. Together, we'll work to improve our relationship with money and our effectiveness in stewarding it well. Here's your host, Eric Scovill.
All right. Welcome to the Wealth Well Done podcast, where we help you with tactical, practical, and spiritual advice so that you can do your wealth well done. This week, we are back again with Alex Smith, founder of Renu Environmental. Alex, thank you for joining.
My pleasure again.
All right. So last week here, we were continuing basically was the fifth episode of this private equity series, trying to help people understand more of the opportunities that are out there from an investment standpoint to not only potentially make an outsized return, but also to use their investment dollars for good. And so we hear people talk about impact investing. This is one of those. And so what we want to do, first of all, is make sure that disclaimer is out there that this is not meant to be financial advice for you, but meant to be educational. And so I would advise you to contact your financial team before taking this any further here. But what we want to understand is more of the business side of what this looks like, not just for Renu, but also for other companies as well that are in this environmental space here. And so we've been talking about the waste problem, which is mostly plastic. We're talking mostly about plastics here. This is plastics. I think they're producing 400 million tons of plastic a year right now, and they're anticipating that's going to triple to 1.2 billion tons of plastic produced per year by 2050. But even if those projections are off, we're still producing 400 million tons of plastic right now, of which about 10% of that makes its way to actually be recycled. And so Alex last week talked a little bit about, basically we're talking the number one, number two plastics are recyclable and make any type of business sense to do it. And most of the plastics beyond that typically don't make business sense to actually recycle. And there's a number of problems with this. As the plastic is recycled, the structural content of it is degrading enough that it loses its integrity there. And so we have a major issue. The world runs on plastic, just like the world runs on oil, and we need it. But plastic, styrofoam, rubber, all of these things just produce major burdens on our landfills now, and that's in countries that have landfills. And we have so much of the world that just uses the throw it out, and it's someone else's problem now, which has created the Great Pacific Trash Island here, and which Alex let us know that it is literally the size of the state of Texas of just plastic waste circling the ocean. And so what we left off with was talking about some of the ways that people are trying to combat this problem now. And would you start by talking a little bit about some of these? We have these conversion facilities that are being put up to basically help try to use. And you mentioned the pyrolysis process, but what are these conversion facilities doing that are out there now? Not Renu, but other companies. What are they out there doing now to try to combat this?
I mean, they are setting up their own version of their chemical recycling facility to process plastics. Again, none of them can do it without emissions, and a lot of new projects are starting to get off the ground or in pre-development now, because I think the U.S. is waking up to see that this is a real big problem, that it's not going away, and mechanical recycling cannot solve it. And so they're realizing that even though advanced recycling may have some emissions, it's still a much better solution than mechanical or traditional recycling. So they're starting to get some legislation pushed forward, as I mentioned before, to advance these efforts. And I've seen some companies now trying to set up large scale conversion facilities that, the capital expense to set something up, I've I've heard, upwards of 800 million for one of these. It's these other technologies are come with quite a hefty price tag and a very long runway to completion, to building the facility and to full operation, to full scale operations. So that's also a big factor where we stand out.
Okay, so let's just talk about that because it brings into another component of this, which is the government's involvement. Because obviously, if you're putting up a facility that's cost $800 million to produce, the demand for recycled plastic doesn't seem to be that high, as we discussed here. So there has to be government aid to help it validate an $800 million decision to put up a facility like this.
Yes and no. I wish there was more government aid, specifically grants or grants specific to advanced recycling or chemical recycling. We haven't quite gotten that far yet to see the tremendous value in it. In order for the government to really see that as a worthy place to fund to allocate lots of their budget. But what we do see are potential environmental financial assets, i.e., carbon credits. And carbon credits is kind of a generic term that I'm using right now, just for simplicity's sake. There are hundreds of different types of carbon credits or environmental financial assets. It depends on the type of project that is making improvements to the environment. Carbon credits are kind of the easiest one to talk about because it's simply removing carbon from the air, if you will. Deserves a carbon credit. Every ton of CO2 removed that would have otherwise been in our atmosphere, you can claim a carbon credit for that. And so this whole, with regard to plastics, there's a new type of environmental financial asset, what we call plastic credits. And there's two different methodologies that are online now to where you can produce these plastic credits. One is diversion from landfill. If you're taking plastics that would have been destined for landfill or in the environment, then you get a credit that you can trade or sell for every ton of plastic that you remove or divert. And secondly is a processing credit. If you're able to create new recycled material, new circular products from the plastics, then that's also a plastic credit. And so you're able to generate these credits if you follow certain regulations and within this methodology, and you're able to sell those credits like you are with carbon credits. And this helps companies, like Coca-Cola or PepsiCo or any large plastic consumer for their product. It helps them offset their plastic footprint, similar to a carbon footprint. So those.
And what incentive does Coca-Cola have to offset their plastic footprint?
Well, PR for one. Everyone knows that they are, Coca-Cola or any of these major corporations that produce single-use plastics are held in a bad light because of how much waste they actually produce. So it's kind of a worldwide thing where governments and the public are calling for kind of more producer responsibility, and for them to be able to, they can't stop using plastics altogether, and they're going to create waste in their process. And so by purchasing these plastic credits, it helps fund these other operations that are doing the exact opposite of essentially what they're doing, and removing plastics from the environment and processing them to create circular products. So that's kind of the point of these environmental financial assets, is that they help fund projects or fund initiatives that wouldn't have been funded without this extra revenue source, if you will.
Okay, so simple as someone who's cutting down trees has to replant trees here to offset the harm to the environment. Someone who's producing a lot of plastic or consuming a lot of plastic needs to then have these credits that they can basically offset that. And then there's all sorts of stuff like that, and that's not just a United States thing.
Oh no, this has been going on for a long time, and I think easy way to think about it, how this cycle makes sense is that if let's say you're a cement manufacturer, you create cement, and that is a very polluting process. Uh, the government created these registries that are worldwide, and they're the ones that issue and are regulating the projects and allowing these credits to be generated. And so they go through and make sure that you're doing what you say you're doing, that you're actually removing this amount of carbon from the air, and that it's measured and verified. And then they'll give you a credit, in which in turn you can sell as a revenue stream. So if you're a cement manufacturer and you want to reduce your emissions, I mean, it's not regulated upon you yet, depending on where you are in the world. But if you want to reduce your emissions, it's going to cost, X amount of dollars to put some technology that captures your emissions and scrubs them, and either sequesters all of them, or just scrubs them and makes the emissions that much less. And if you're doing it voluntarily, then you should get some sort of credit to help fund this extra initiative and extra effort and cost that you're putting into to scrub the emissions and to make your process more environmentally friendly. And that's kind of the cycle here. And so you can produce a credit that you can sell to another company that isn't able to reduce their emissions or footprint organically. And so that's why these credits are going up in value as we realize the need for more higher level environmental standards. We realize that we're really polluting our earth, and to heal the earth, we need to take measures and big steps, starting from really from the top down, from the largest polluters through our manufacturing or industries, and reduce the footprint. And so I think that's how these credits were initially designed for, and I think it's effective, actually.
And so one of the things I was just going to open up Genesis here to the instructions that God gave Adam, but I want to differentiate this a little bit, because we're not saying that necessarily that the earth is so fragile that the earth's going to fall apart and we're all going to die, because that's not it. God, that's not biblical in any sense. And there are certainly people on the environmental side who will go to extremes with that, but it doesn't negate us from our responsibility to take care of the earth. And that's what God told Adam to do, that we're supposed to go and take care of the earth here and tend to it. We're, cultivate, subdue it. And so with that, this is part of our responsibility here as well. We're not, Alex isn't trying to pretend that you're putting on your Captain Planet cape and you're going to go save the world, but this is more so that you're doing what the Lord commanded us to do here. And so thank you for that. So part of Renew, so from an investment standpoint, and just so we're clear on this one, apparently they thought that I needed balloons for that.
Happy birthday, I guess.
If someone wants to tell me why they keep doing all that with the thumbs up and the balloons, I'd appreciate it.
Idea.
Apparently it's not just Google. So anyways, the idea of investing into Renew, we have been raising money, but it looks like that is going to be funded here, and that by the time that this airs, there probably will not be an opportunity for investment. We'll talk a little bit about that at the end, but I just want you to know that as we're talking about this, we're going to talk about it as if there is money, there is a room for someone to become an investor in here. But the purpose of this is to help a listener understand, more of the complexities inside a private equity investment. So what Renu Environmental has is you've got three different pillars here. And so one of them, it revolves around the consulting for these carbon credits. You want to hit on that briefly? We'll hit a little bit on that one and the trading, and then we'll jump back into the technology.
Sure. The consulting side can range from us coming alongside a company and helping them organically reduce their carbon footprint or emissions through different methods that they might be able to take, or different technologies they might be able to apply in their process. Let's say if it's manufacturing or something, to organically reduce their footprint. A lot of these companies are being regulated now. It's certainly in Europe, everyone is regulated, and it's coming down the pike in the US as well. And so we can come alongside and help them reduce their footprint organically. And if they can't, then we can help them buy the appropriate credits that will help offset their emissions. Secondly, with the consulting, we partner with companies that are developing environmental projects that will make an impact, or a negative carbon impact, if you will, on the environment. So I can give you an example of one. This might be easier to understand by example. This company in Texas, they want to do enhanced oil recovery for oil fields producing crude oil. We have come alongside them so that we can take them step by step in doing it the right way, so that you sequester all the emissions, and so that it's not it reduces the environmental impact, or maybe even negates any environmental impact. And so what we've done is we've aligned them and their process with the different methodologies that are online for producing certain types of credits. So they want to do enhanced oil recovery, and there's a lot of emissions when you're drilling for oil. And if we've applied a technology that's available to sequester all those emissions, so that all the methane and CO2 and everything that comes out of the ground when you're drilling gets captured, and then those emissions, the methane, the gases, are sent to a central facility where you have a turbine to generate power, and those gases are mixed with some natural gas to power a turbine, and then you generate renewable energy, and that the emissions from the turbine are then again captured and scrubbed and gone through a filtration process that's proprietary, that you're left with it's actually a water filtration process, and you're left with carbonated water, pure CO2 in water with no other emissions. And then that water is taken and injected into the well to facilitate the enhanced oil recovery. And so it's a full closed loop system. And what's another interesting thing, if let's say this is not an oil related thing, and we want to capture those CO2 emissions, that carbonated water can also be used in vertical farming in greenhouses to grow crops and plants. And that's another way to provide circularity and to sequester that carbon. I'm not sure everyone knows, and I didn't really know this until more recently in doing all these studies, that crops love CO2. They love carbon in many different forms. So it will tremendously help the growth and value, the nutritional value of crops as they have absorbed more carbon. So there's a lot of solutions that are out there that we like to come in and help put these pieces together, so that we can make your project or your company as circular and as environmentally friendly as possible. And at the same time, we teach you how to follow the right regulations and methodologies so that you can be eligible to generate these carbon credits or whatever environmental financial asset ties into your project to create another revenue stream. So in a long form, that's our consulting side.
Okay, very good. And then I've got these. So I'm this company in Texas, and now I am going to produce all of these EFAs, these environmental financial assets. I'm going to produce all these EFAs here over the next 5 years. What do I do with them?
It's a good question. A lot of people ask that exact question because what do you do with them? How do I sell them? How do I know that I'm getting fair market value for them? Is there a strategy in holding them? That's these are these are a lot of unknowns. These are different than regular, financial markets. It's still in early stages in how these exchanges work and are growing. So what we have set up is our own in-house trading desk to help you answer all those questions. We have a trader with almost a decade of experience specifically in trading environmental financial assets. And you'd be probably surprised to know that you can even sell futures in certain carbon credits or provide a forward sale. For instance, let's say this Texas company, they know exactly how much CO2 they're going to sequester through their process once it's online, and therefore they know exactly how many carbon credits they're going to receive as they operate and go to full capacity. So they can go to a buyer. We can facilitate a transaction with a buyer to forward sell their credits as a promise, and the buyer will pay up front for a certain number of credits, and we try to be conservative as to not overpromise anything. And they will pay up front for the credits in forward delivery, and that funding, that amount, that transaction can go to fund the actual project to get it off the ground. So it's kind of pre-selling your product in order to help fund your project. So that's also an option. Yeah.
Okay, thanks for that. So those are two of the pillars or profit centers, if you will, for Renu. But let's go back to the main one here. So last call we were talking about pyrolysis. We were talking about the process that normally that word pyrolysis normally refers to, and how what Renu is doing doesn't fit inside that box really at all, but it's still lumped in there for generic sake. Talk to us a little bit about what's going on inside Renu, the technology that you guys have, and some of the history to it, and how it's progressing.
Well, I mentioned prior that the inventor of this technology has spent his entire career in pyrolysis and developing this, and he came up with this idea to change his process or develop a new method over 20 years ago, and since then it's just been continuing the R&D in refining the process, applying kind of ancillary technologies that help with the efficiency or product quality downstream, and now we're ready to launch, and in fact we're as we speak, it's being built, our 2.0 unit, if we will, with new patents that were granted last year in 2023 on all the improvements that have been made in the last decade, really. And that unit will come online here. Our pilot plant will be operational hopefully in Q3 or early October of 2024.
Okay.
But yeah.
That seems like a quicker process than building an $800 million facility
That's
we were referencing earlier.
You're very correct. That is also one of the huge advantages or competitive advantages, if you will, of our technology is the speed of manufacturing, or or the build time, if you will. As you know, the longer something takes to build, not just in uh, not just in building a facility, but in any sort of construction, the more money it costs. And so we've been able to increase the efficiencies in the design and actually simplify the design so that the build time is minimal and we can get a plant operational in a matter of months rather than years. And so that's a huge advantage that we like to pass on to our potential end users.
What do you want listeners to know about the tech?
I want them to see it work. I'm excited
Okay.
to show off what it's going to do. I, I it's going to speak for itself once we have this operational. I can talk all about it right now, but really when you see it operate and you see what it produces and there's you're going to be, I think everyone that comes to see it is going to be a bit dumbfounded by uh, how quiet it is. We're going to operate it indoors. There's no odors. There's no emissions. You're going to be looking for an exhaust somewhere, and there's going to be nothing there. So I think that this, for many, many reasons, is the most viable solution as far as technology to our plastic waste problem. So I'm excited to get it operational, for it to speak for itself.
Okay. I mean, um, who are these? So you're going to have these plants here. Is this something that the government buys, the states buy? Like who are the end consumers or the purchaser of your
They
um,
will
these products here? And
typically,
obviously,
yeah,
is this so help someone understand? This is a machine, and it's just like a big conversion plant that's we think of like a nuclear power plant, or what's the
yeah. Let me break it down. It's a good question. We're going to be building. First, we're going to set up our manufacturing facility so that we can build these machines. And each machine will process 10,000 tons of plastic a year. The output of the machine really depends on the type of plastic, but you can expect in between 60 to 80% yield in oil based on the weight of the plastics. 100 pounds of plastics will get you 60 to 80 pounds of oil. And we want to increase our capacity, our output, so that we can build quite a few machines a year, upwards of at least 20 machines. And we plan to set up our own larger scale conversion facilities that convert 100,000 or more tons a year. Um, and we also plan to lease these to end users that have their own source of plastic waste that they need to remediate. And we set up a leasing model for them so that they can process their own plastics and make this oil and be profitable in the process. Um, the oil will be most likely sold to uh, other petrochemical companies that are making virgin plastics, that are producing pellets. So you think about any plastic company. Let's say they make Crocs, for example, and that's a plastic product, and they don't just get oil and make that that product out of an oil. What happens is they buy um, pelletized little plastic pellets that are already the exact material that they need, and then they will go through their process and usually do some sort of heating process and then injection mold to create their product. That's typically most plastic product manufacturers. That's how it goes. So we'll be selling this oil to kind of the first step of the process. The companies that will go through the uh, complicated polymerization process, and then they will create certain types of plastic pellets that will be sold to the manufacturers of plastic products. So that's in a nutshell.
Okay. So we're talking about, you had mentioned MRFs on the last episode. You had mentioned the hospitals, and so another, we've talked about some food manufacturing. You mentioned Coca-Cola, another place like that. So people who are producing a lot of plastic waste, and there are many candidates for that. They might be a candidate for having one of these facilities right on site, because the footprint of these are so small relatively to what you would traditionally
Right.
think of.
Yeah. So
And what type
10,000,
of footprint are we talking about?
uh, a 10,000 ton unit has kind of a base footprint of about 3,000 square feet. And that's without the conveyor belt. You can configure that a few different ways. That can be, you know, extended out, or if we have multiple units stacked side by side, then the conveyor belts will likely, how you feed the plastics in the machine will likely come from kind of a single source. So we say about a 3,000 square foot, even potentially smaller, as a base footprint for these units. And then how you store the final product, whether that's right next to the unit, or if you have multiple units, you combine streams and it goes to a central location, a tank that's outside of the building or wherever. That's up to you. But they're not large. They have a pretty
No,
small footprint in
that's nothing.
comparison. Yeah,
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 3,000
in
square feet
comparison.
compared to big a big hospital or some other campus, like that's nothing.
Yeah. So these, yeah, plastic manufacturers, that a lot of these industrial companies have trimmings and clippings and purgings of when they're manufacturing whatever product that they're making, and they have to pay someone to come pick it up, and either if they're lucky, they process it and sell it for a recyclable material, but oftentimes they're hard to recycle, or they fall into the category of plastics that just don't get recycled, and they just go straight to landfill. So
Okay.
we can provide them a solution that they can process their waste on site and generate profit from it, rather than paying to get rid of it.
Okay. Okay. Um, the let's see here. So from a business standpoint, Renu is looking to have these models that they are going to have some of their own conversion facilities. They are going to have some of these that they will basically lease out these units to other people who would, these candidates that we mentioned, just like the hospital, these plastic producers, or municipalities, perhaps, right? And I would imagine that municipalities would also be on the radar there. So they could put this right next to these MRFs where they're collecting all of this material and they're sorting that out. They could have these right next to that, so that way that's just part of their process. Then is that they take all that waste and throw it right into here. Um, okay, and then uh, and then from there, out the other side of this is oil. So we're producing oil that then is able to be sold back to the these people who are basically pelletizing this and doing that work. And now an investor in Renew is going to be capturing some money on the lease, some money on the oil sales,
Right,
some money on these environmental financial assets, and
right. The
so
reason
and then
that
as well
that
as, oh, good.
we're the reason we're doing a leasing model is for a couple of reasons. Number one, to minimize the upfront capex for a potential end user. A lot of these other technologies are very, very heavy capex, as we mentioned earlier, and just does not make it economical for a company to buy a unit and process their own plastics. And so we make it economical um, by doing a leasing structure, and from there is a profit share. And even a single unit can be profitable for a company. You don't need a 100,000 ton per year facility to be profitable. Even one unit that does 10,000 tons a year will generate significant profit. And
How much oil does the 10,000 ton unit generate? You said it
um,
might be like 6,000
Right.
pounds, right? But so how many barrels of oil is that?
What, yeah, when we talk about barrels, we're looking at least at minimum, again, depends on the type of plastic you put into it, but at least 30,000 barrels of oil per year per machine. So it's significant.
You said how many barrels?
30,000,
30,000. Okay. And that's
if
on a
my math is
10,000,
correct. Yeah.
that's on a
We
10,000
operate,
ton unit.
that's a 10,000 ton per year unit. The industry standard is kind of based on tonnage, on weight, more than it is on barrels. But it's over 1.8 million 1.8 million gallons. And so if I do the conversion correctly, I'm not going to do that exact math in my head with 42 gallons per barrel, but it's over 30,000 barrels. Yeah.
Okay. Okay. Well, thank you. Um,
Mm.
okay. So, and from that standpoint, when you were taking on investors here, and you still are at the moment here, but maybe not by the time this recording is released, investors are coming in for straight equity into this. And what is the valuation at?
Right now, doing a $40 million pre-money valuation. I think there's a lot of factors that we may not have time to get into, which constitute that valuation. But that's essentially what it is. I think, well, I think it's a deal. I think every founder may say that as well. But when you hear about this technology, um, well, let me tell you, as soon as this is online, it's going to be worth a lot more than $40 million. And so, um, we're offering this right now because we don't have the unit operational, and you're putting faith into us as a company and being able do to say what we do, and we want to reward that.
What type of what's giving you the confidence that this will work?
Well, there have been previous units operational, other pilot plants for earlier generations. This is the first one that is fully emissions free, and so we know that the technology works. We know at the heart of it, the core of the technology hasn't changed. There's just been a lot of other improvements made and other technologies applied to the process that we're able to achieve this zero emissions stamp, if you will. And so I think that's been a long time in the works in the process, um, and it's beyond R&D or theoretical at this point. It's proven technology, and the patents are there to back it up.
Okay. All right. And yeah, from putting my investor hat on for a minute here, the what what I mentioned earlier, that there are high multiples available inside private equity. It comes with significant risks. And so as an investor, or when doing due diligence, what we're looking for opportunities that we can get an outsized return per unit of risk. And you've heard me talk about that before if you've been listening to the show. And so the risk here is 100%. You have the downside of you could lose all of your money. And so in exchange for that, we need to understand what the likelihood of that is. And in exchange for that, what the upside is. And I don't want a chance at 100% return, meaning, my $100,000 could become $200,000. I don't want a chance to get to $200,000 if I have a chance of going to zero. If I have a chance of going to zero, I want to make sure that my return potential is significantly higher than that. And that's certainly where Alex has mentioned that once this is online and proven here with the new updates being zero emission, then and all of the carbon credits are validated as well, the worth of this company is significantly more than where it's at here. And so at that standpoint, that's when we are finding that we think that there's a strong likelihood that we are going to achieve that goal. And so that's why we've chosen to partner here and invest with Renu, and that's certainly the basis for us getting involved or bringing other investors in. But that's what you want to be looking for when you're looking at private equity and trying to decide where you want to go. You have to understand what the risk is. Is your risk capped at just the the investment? Are you a limited partner here, or are you a general partner and exposed to even more risk than that? The higher risk, the higher return. And so that's what you want to see. That's not a guarantee by any means. So again, please, I hope this series has been helpful to help you see what private equity investments look like. They can get complicated. And, Alex mentioned there's a bunch of different arms of income streams, but that's a good type of complication. It's a good diversity. They're already post revenue here while they're still waiting for this machine to come on because of their other lines of service. And so you want to look for that. You want to make sure that you really vet out the founders. We care a lot about the integrity of the founders here, and with Alex being a brother in Christ as well, that is certainly a key component of that too. And so, Alex, we thank you for the time. Thank you for the expertise. Thank you for the impact that you are making on our planet. And we wish you all of the best in your endeavors here. If someone wants to get a hold of you, look up more about Renu, or ask if there's a chance that an investment's still available. And we did fail to mention this, that although the equity round that we have, the money that we raised for this might not be available, there are still potential opportunities for what are called joint ventures here. And so if someone's wanting to get in touch with you or to learn more about that, how do they do that?
Our website is renuenv.com. RENUENV, like the first three letters of environmental.com. And you can also send us an email, info@renewenv.com. I'm happy to talk to anyone more about this anytime.
All right, great. And that's Renu, RENU. Thank you, Alex. Appreciate your time. Thank you, listeners. And we will see you next week.
Thank you again for listening to Wealth Well Done. Be sure to subscribe to the show on your favorite podcast player. And together, we'll continue to improve our relationship with money and our effectiveness in stewarding it well.